Good evening, all. It's day 101, and after 100 days of recorded videos and 100 days of trading at least, we should have learned a lot. We should have improved by a lot. Yes, I have improved a lot. I have gotten better at taking losses or taking wins or even taking trades. But one thing I've not improved is uh, getting rid of fear. Yes, we have managed to go from 0.35% risk to 0.5% risk, but the thing is that is not enough. We need at least 1%. We need to at least risk 1%. Okay, that is how the whole world is doing. Some people are even doing 3% risk, 2% risk. I'm not even going to that level, but 1% risk is bare minimum, and I think I've been under performing because of that. So starting from tomorrow, Monday, I think 28th of July or 29th of July, 28th of July, I'm going to be risking 1% for the Euro USD trades, as in Euro USD's Asian sweep and London sweep. Okay, mostly Asian sweep, I'm going to be using 1% risk. And for sweeping and random sweeps, we're going to be using gold. So for that, I'm going to be risking only 0.5% because the win rate is just barely 50%. So yeah, that is that. Okay, because we need to improve daily, every month, every week. We need to improve, and for us to get to our goals sooner, we'll have to scale up faster. Scaling up also means increasing our risk. Okay, so as of now, I'm thinking we'll do 1% for 1 month. Okay, so we will get around 5 trades um, in Euro USD. So we might be taking 5 or more trades at 1% risk, and rest everything else will be just 0.5% risk. Okay, so uh, as per yesterday's objectives for today, I backtested gold's win rate for Asian sweep and London sweep. Okay, and we got interesting results. Um, um, Gold, okay, looks like it is better to trade in the continuation format. Okay, because it's not like Asian session is consolidating and the London sweeps and then flies. It's not like that. Sometimes, I mean, most of the time, gold is only doing continuation pattern. But then let's because we can use that for our random sweeps. So let's just leave that part. Okay. So when it does sweep Asian low um, or London low, we have a result that looks like this. Okay. So I thought I'll just be doing 1 month and then 2 months, and then I went to 3 months, and I went to 4 months. So from March 1 to July 26th, is almost 4 months. We have 2 more days or 3 more days left. Okay, let's just say this is the result for Asian sweep and London sweep. Okay, but what I realized is this: we have London sweep here. Okay, Asian sweep, which is within the Frankfurt and London session here, and then London sweep, which is during the New York session. Okay, so first let's go to London session, and if you see, we have checked bias and unbiased. Thank God we did not just use the counter, and we used bias and unbiased. Okay, so if you see that, these are the results. 1 hour order block seems to be the most reliable. The 1 hour fair value gap seems to be the most unreliable. Uh, Soon I'll show you. And 15 minutes order block is okay, fine. Okay, and then in unbiased, this is the result: 511, 406, 211. Okay, and this is the win rate for each. If you see biased, we have 100, 40, 50. Unbiased, we have 83, 40, 66. And obviously, this is not exact because the number of trades we have are very, very less. Okay, the total number of trades we have is just 21, and we cannot base our win rate on that. But what we can uh, you know arrive at, what we can conclude from just this alone is that if you see, uh, biased wins, biased trading is much higher win rate. Okay, let me get to that. Okay, wait. Now, London sweep. Okay, London sweep, which happens during the New York session, is fully at loss. Okay, fully at loss. Uh, so I did not make any data. Obviously, everything is a loss. And New York session Asian sweep. So sweeping Asia during New York session is literally loss everywhere except just one single trade that gave us a profit and another trade that gave us a break even. Okay, it's so basically this is pointless. So what we realized from this backtest is that during the New York session, Asian sweep or even the London sweep is pointless, not worth it. Okay, maybe we can just do random sweeps as in continuations and not reversals. So that is one important thing we learned. Okay, and the next thing, which is biased wins are much better than the biased trading for gold is much better than unbiased trading. If you see Euro USD, okay, I'll get to that soon. Okay, so this is the result for gold, and if you see our point of interest, 1 minute, only 15 minutes order block, 1 hour London's 1 hour fair value gap as well as order block. Okay, if you see that we have 7 wins, 1 break even, and 4 losses. Okay, and what we saw is, look at this, fair value gap number of losses 3, fair value gap number of losses 6, biased or unbiased. But does that mean that the fair value gap is no longer reliable? When we go to the Euro USD chart, fair value gaps are really uh, very reliable, but here it's the opposite. Maybe it's because of gold's random spike. Sometimes, most of the time, when gold just spikes up for no reason, no news, nothing, just random spikes up. So in those situations, I think those fair value gaps are pointless, unreliable, and stuff. Maybe it's just a very small sample size for us to decide that. So only in the forward test, after months of data, we'll be able to know whether the 1 hour fair value gap is even worth trading or not. But regardless of that, let's see. Biased wins 714, win rate 63%, and unbiased we have 11 wins, 2 break evens, and 8 losses. Obviously, lower win rate. So yeah, I think maybe we can trade gold with bias, or maybe reduce our risk for per trade when we are trading the unbiased setup. Okay, and if you go to the number of times we got 3R, then our commissions would, and after let's look at the data, our returns would be 11. Okay, and then our win rate would be 55%, and 1:2 we'll have returns of 10R, which is almost the same. Okay, and then if you see net profits of 1:3, then we have 10.28, then 1:2 we have 9.28, and number of trades 12. Not a big deal at all. Okay, and then if you see unbiased, then we have number of 3Rs we have is 8, commissions 1.26, and then returns we would have 16. Good returns, obviously more returns because more trade, but the win rate goes to 50%, which is almost who cares, like that type. And then 1:2 we have 14R. Okay, so 2R less, again doesn't matter a lot, maybe is useful for paying off commissions. So this is the result after commissions. 1:3 14.7R, then 1:2 we have 12.7. Number of trades, obviously more, 21 trades. Okay, so from this what can we conclude? First thing is that New York sessions for gold is horrible because we didn't even have a single win other than this. Okay, other than the fair value gap, which is already giving us bad win rate. Okay, so it's not worth trading the New York session. And I think it's a decent sample size for decent results to decide that uh, New York is bullshit for gold. Okay, because I think it's too volatile and it always sweeps us off. And it's 4 months data, so I think we can rely on that and say New York is shit. So only we trade Asian sweep during the London session, and that's it. Okay, that is the first conclusion. Second conclusion is that um, biased or unbiased, I think we'll have just similar results in the long term. If we go for 1 or 2 years, I think the data will almost match. I think this will go down to 55%, and this the biased data will go to 55%, and I think unbiased data will go to 50%, and I still think unbiased data is going to give us more returns. Yeah, so this will go down to 55%, this will go down to 50% or 46%. Okay, in the long term, I think unbiased is going to give us more returns, but then obviously it's much more scarier. And the fair value gap, we'll have to only forward test and see what is the issue. Okay, then the number of trades for gold would be 5 if unbiased and 3 if biased. Okay, so similar results for biased and unbiased in gold, but then obviously the win rate is much lower compared to Euro USD, which is this. Okay, same stuff. Okay, so we have London sessions and Frankfurt and London sessions Asian sweep, which is this. New York sessions Asian sweep, and New York sessions London sweep. And if you see that, we do not have trade. Okay, we barely have trades for this. 211, 211. Okay, doesn't matter. It's all the same. 66%. Okay, the London sweep is decent. Okay, and if you see the sweep of the Asian session only during a Frankfurt and London, biased we have 4 wins and 0 losses, which won't be true in the long run, but still a very good win rate. And if you go to unbiased, again amazing results, 571 wins and 1 single loss, which is like almost 87% win rate. Okay, unbiased. And if you go to New York sessions Asian sweep, we do not have a single trade as well. Every single trade was during the London session. Okay, so if we add this and we get this result. Okay, we have bias and unbiased, and if you see the win rate is similar. Okay, so maybe it's those 4 months where it was consolidating too much, so both sides of the market did work, but I don't think no pair can consolidate. Especially an important pair like Euro USD, the most important pair, cannot consolidate for 4 months. Okay, so I think it is safe to say that unbiased and biased data is similar, but then we have almost double the returns with unbiased data, and more than double. Okay, so if you see 3R, we have all the wins in biased. We have 6 3Rs. These are the commissions, returns of 17, 85% win rate, returns 11 for 1:2, and then this is the net profit. Okay, so I think best to trade 1:3 for Euro USD and even gold as well. But then we have only 8 trades totally from May to July, May, June, July. So 3 months we have only 8 trades. Okay, wait a minute. 8 divided by 3 is 2, and 20 divided by 3 is 6. Okay, and if you see unbiased trades, this is the result. 14 times we go 3, commissions 4R. Okay, and 1:3 we have 40 Rs. Okay, and then win rate is 87.5, and then returns for 1:2 is 30, and then obviously 1:3 is almost 10. It is 10 or more than 1:2, and there's a number of trades. So from this data we can say that Euro USD is the best pair to trade this Asian sweep strategy. I also checked Bitcoin. It is horrible. Okay, so let's not trade Bitcoin. So, and also GBP USD doesn't give us good similar results to Euro USD. GBP USD is almost like gold, so I think you can only use it as a reference pair and maybe reduce the risk to 0.5% and trade that. And Euro USD we can trade 1% fully for this strategy. Okay, so GBP USD and gold should be treated similarly. Okay, so what is the conclusion from these two back tests? That yes, gold has a lower win rate for this strategy, but we can still trade this with lower risk. And EU, the best pair, we can just trade biased, unbiased, whatever, and we will still be extremely profitable. Okay, so yeah, that is how we are going to be trading from now on, and see you guys tomorrow. Bye.